Hello, everyone. My name is Monica Harper. I'm the Executive Director of the AACFB, and I'm pleased to welcome you to today's webinar, Strategies for Fraud Detection and Prevention in Commercial Finance. Please note that today's webinar is being recorded, so all participant lines will be muted during the broadcast. However, if you have a question, you could submit it anytime during the presentation in the Q&A box, and they'll be answered by the end of the webinar. Please reserve the chat for communication between attendees so that your questions will be easily identified by the presenters in the Q&A box. If you have a question and would like to raise your hand and speak verbally, you can hit the raise your hand feature and you will be unmuted to speak. Our presenters today are Shervin Roshi with Slim Capital and Vicki Rocco with Integra Capital. And unfortunately, Alex Erickson is under the weather today, but we wish him well. At this time, I'll turn it over to Vicki and Shervin. Thank you for sharing your expertise with us today, and we look forward to it. It's all yours.
Thank you. Thank you, Monica. Appreciate it. So Vicki, thanks for joining me, and we're wishing Alex a speedy recovery. Wanted to just put this fraud has been on the rise, and as much as we try to stay ahead of it, the unscrupulous characters tend to outpace us in many ways. So we're here to just do what we can to give some perspective, offer some tools. We all have kind of compared notes in terms of what types of tools we use. We're going to share some of those and tell some stories, and hopefully there'll be some good takeaways. We will take questions throughout as well, so we're happy to do that. So just feel free to, as Monica said, chime in on the chat, and she'll moderate that through. Vicki, I'll take the lead if that.
Yeah, go for it.
So we've effectively broken down fraud into three basic categories. The three categories, as you see up on the screen, are the identity fraud, business fraud, and vendor fraud. Each of those have some subcategories to them we're going to go in and explore. But as a deal, just as a matter of principle, when you're looking at the three basic formats, a deal comes in, you kind of have to see that you're checking off boxes to make sure that these are handled. Monica, you want to? Okay, so we're going to dip into identity fraud first. So some of the signs of ID fraud, right? Is someone pretending to be another character. This happens a lot in industries where you have a strong applicant, whether it be a doctor or something of that nature, and they're looking for equipment, but that equipment may or may not fit the bill for what they're buying. We had a dentist office looking for, $200,000 of copiers recently. And it's like, first red flag. So as we're talking through some of these, it's a good idea to just always put that smell test out there. Does this even make sense? Are the pieces even, are they in order, in line with what the business does? Does the deal come from? A lot of brokers, a lot of folks try to bring in direct business. You spend all this money on marketing and everything. There are bots out there. There's a lot of channels out there that are bringing in deals, or that are coming in and trying to find where the soft spots are. And what they know is, they know what your app-only limits are. So they'll come in just under those. So they're kind of just below that radar. Those are kind of just the basic fundamentals to give your staff. Some of the tools that could be used when you're looking at where the deal comes from, email addresses, right? So if there's a domain that says thecompany.com, and then you have an email come in that says thecompany.co or companysales.com, you just have to put your flag up for a second and make sure that it's right or not right, so that that person, so that the identity actually matches the applicant. Looking at phone numbers, we try to check those. Again, when there's a lot of times when there's a small company, closely held entity, they ask for corp only just because. That doesn't fit the bill for us generally. And I think that a lot of lenders out there figure the same way, or obviously modified documents. So what tools do you incorporate to look at some of these things? Well, obviously the background checks, right? Whether you use Clear, TLO, Vicky, I think which one do you use?
We use Clear.
You use Clear. So similar type of information. Basically, it's going to give you background checks on the properties they own, if there's any suits, liens, judgments, and if there's any kind of ID lock or ID fraud alert that should be up there. When you're looking at driver's licenses and the personal documents, there are ways to check to see that the driver's license is actually a legitimate license and that the information on there matches. You'd be surprised, Google searches, what they could find. Google searches are sometimes more telling than a lot of these other tools, believe it or not, because you'll see that there's some news, right? We had a deal where we had a restaurant in Texas. They were going to do a pretty big build out, a few $100,000. They had a rich grandma. Rich grandma showed us $8 million of net worth. She was a guarantor. This is, and my whole premise on that was that we had to speak to the grandma. She was 90 some odd years old. Make sure we knew what was going on. Anyway, this is pre-DocuSign days. Get the deal in, notarized, and we touch the paper, and it's not even a notarized original. And so that started the whole thing, and they were trying to spoof. Long story short, everything had checked out. Once we went back and did the Google check, we found that the applicant was a part of a whole ring of fraud that he had been going through with different lenders, been sued, or had criminal charges, et cetera. So not everything gets picked up, but sometimes, again, that Google search. Soft credit pulls, those could tell you, obviously that's a good way. Sometimes you're even able to do that just by finding the other applicants that are on a deal. On the credit search, there's also a fraud alert. I'm sure you guys have seen that. We tend to call on those to make sure, and you'd be surprised how many people say, no, I have not checked for credit. I have not applied for credit. And then there's a way when documents come in on a PDF, when they're emailed to you, there are different tools that you can actually check for the validity or if they've been tampered with. A quick way, it's not always foolproof, but if you hit Control-D on your Adobe, you'll see if there's been any modification done and when. We've seen recently, we even had application come in, and you could do that with bank statements too. Bank statements are a whole nother thing in and of themselves. So you get an application in, we got it, we showed one owner, 100%. We did our check. Sure enough, we see that there's more than one owner. We reached back out. We said, where are the other owners? Oh, here you go. And they sent us, we put the two documents side by side, did our check, and we could see that it was modified within minutes of having received the first one. So they were hiding an applicant. So that's another way of fraud, right? Fraud ID is to exclude rather than to spoof, I call it. Vicky, chime in on some of your tools. I think these are.
So I guess one of the things that I wanted to point out is there are multiple categories of identity fraud, but the two that I think we've probably seen more often than not are identity theft, which is again, where, there's a legitimate person. We had one that was kind of similar to yours. And elderly identity theft is a thing, where we had a gentleman that, the application came in and it was for an elderly woman. Ostensibly, she was going to, lease this equipment. We finance primarily transportation. And so she was gonna finance a lease an over-the-road truck for her grandson to drive. But as we got into the deal and got down towards funding, we did a phone call and found out that she didn't know anything about it. Her grandson had actually stolen her driver's license. So we had a legitimate driver's license, had forged her signature, the whole 9 yards. So I think, Shervin said on multiple occasions, it needs to pass the smell test. And I think those are good examples of, taking a deeper look when something just doesn't make sense and you've got an 80-something-year-old woman who's doesn't have a CDL that's wanting to lease a truck. So there's the identity theft. There's also synthetic identity fraud. And I don't know that it's as prevalent, at least with us. And one of the beautiful things that comes from eNotary and DocuSign is a level of authentication that we didn't have back in, pre-DocuSign days, where we were having to match signatures visually. So I think that's one of the benefits that's come from using, some of the online tools to send out and get documents executed. But synthetic identity fraud is more along the lines of this person doesn't exist, but they've taken, bad actors, as we call them, have taken bits and pieces. They've either come across online, they've purchased on the black market, or in whatever way have crafted this identity that they then try to use, and especially coming in app only. I think anybody who's using these tools like Clear and some of these other places to vet an applicant, hopefully that would come up. But those are some of the things that we've seen in the past, kind of layering in on what Shervin said about, checking your document. You can check for revisions, like you said, on PDFs. Also look for edits on your documents, bank statements. Does the font match? A lot of times they're not going to be able to align correctly. They're not going to be able to use the exact same font. And so, those mismatches are definitely things that should warrant a deeper look. And the one thing that I was going to say with regard to email addresses, and depending on how much about domains, one of the things that I've seen in just people trying to, the phishing texts that we all get, or emails, we could have a domain that comes in, and whether it's used for their email or whether it's linked to some other part of their application, and let's say ups.com, as long as that domain is the last part of it, that's the thing that you're going to look for. Where you will see, or something that should trigger a deeper look is going to be if it's ups.equipment.com. That is not a UPS site. So the legitimate site is always going to be the last thing right before the .com or .net or .anything. And so, just some of those basic things. Google search is going to give you a lot of information, not only on personal fraud, but even going to vendor fraud and some of these other types of frauds as well. So that was 2 cents worth.
No, excellent. So in terms of discrepancies in email addresses, to come back to what Vicky was saying, is when you send out a DocuSign and they send you a different email address completely than what you had before, that is a flag, because all of a sudden they send you anyone can make a random Gmail address, and ultimately you need to make sure that it's the person that you are working, that you're, your debtor or lessee is the person signing the docs. And those out of wallet questions are a good barrier, right? So they could make sure that that's a valid valid signature and valid points. There is a tool, Inscribe uses this, inscribe.ai, which will tell you if the email address is new, how long it's been around for. Alex is the one that uses this, so he would have filled in some of those details, right? But that's a tool that we've learned can give you some of those facts as well, so that they can match up, so that you're not just going to have a new email address that pops up going to some random person. For the bank statements, they have gotten very savvy at those, at modifying those. Vicky's points are spot on in terms of making sure that the numbers match up, that the fonts are the same, et cetera. But there are tools. There's another tool called Oculus. I think we have that on a future slide, that you could run them through. Oculus takes a little bit longer to check everything, but there's also some other basic one. And again, Alex had a couple as we talked through this. I'm gonna see if I could dig up another one or two of those that we were using or looking at. Okay, so ID fraud encompasses everything from the application level related to the borrower, including banks. For the purposes of what we're doing here, by the way, we're sticking kind of to the app-only realm. To have the conversation about full financials and tax returns is a whole nother animal. We could probably have a whole nother session on that because there's so much more involved. There is a question I'm going to read over here from Mayana. How often do you guys see junior senior fraud in the industry? Example, son is a junior with the same name as the father, but applying under as the father. Excellent question. Vicky, you want to start there? Probably.
Well, our credit director could probably answer this better than I can. I know that I've seen it come occasionally, but we do, again, we do quite a bit of vetting, and the Social Security number, the junior senior, we just dig deeper into it to make sure. And a lot of those background checks are going to come back with any discrepancies that have happened on them.
I'll tell you, age, right? The smell test, right? Go back to that. Wait a second. Junior is 78 years old and he's running this company, or the company's been around for 35 years and your debtor is 22, right? So these are some of the things that you kind of have to piece together. Home ownership, yes, it's possible for a 23-year-old, but is he actually going off of dad? So some of those things, the tools don't always answer it, because the background checks, sometimes they'll give you alternate Social Security numbers or date of birth. So it's completely not sure, because the addresses probably match up at some state too. But we don't see as much of it unless we're able to nip it early on and without even knowing if it got into fraud level. But that is something always of concern with juniors and seniors, for sure.
We had another question. Have you experienced the debtor who denies the authenticity of a DocuSign signature? We have not. Have you ever had that come up, Sherman?
Thankfully, no. Oh, it's from Ken. Interesting. We haven't, because I think the out of wallet questions, the IP address. Oh, so IP address, right? That's a big part. So everything that comes back to us needs to have gets a summary page. I'm sure a lot of folks on this call are now using DocuSign. You get the final page. It gives you the IP addresses of where these were signed. It makes sure to tell you what form of authentication was used. And in that, we could cross-reference that IP address. There's a tool, it's just where is my IP, and you could punch in the IP address and you could see where it is. If that IP address is coming up in the Bahamas when your guarantor was supposed to be signing in Oklahoma, you probably have some questions that need to be answered. But I having done this for a long time, and I was one of the guys that was working hard to get the banks to bite off on DocuSign back in the earlier days, and we had a whole session, a series with Bob Cohen, about why this is actually safer than the signature. And I gave the example earlier of how a notary was fraudulent as well. But thankfully, this has held its own pretty well, Ken.
Bill May put a comment in the chat that you check out the website of the customer/lender for free on scamdetector.com. I haven't heard of that, but have you guys heard of that?
Check it out.
No, but that's why this is interactive. We don't have all the answers, by the way. All right, business fraud. So business fraud is very similar to ID fraud, but ID fraud for the small business world, closely held entities, smaller companies are generally going to be, the company is the person for the most part. The business fraud is where they're trying to spoof being an active member of that business that's applying. Perhaps it's a more established entity they're trying to come up with. Maybe ownership, they're trying to sidestep certain owners, or maybe pretending that they are the owners. And we've seen that time and time again, where they try to, slip and I mentioned earlier, slip a bad apple of their ownership under the rug. We had one last week that they said, well, we didn't think he was going to be important. We're not going to include him because he's going to be old and retiring soon anyway. So these are the stories that people justify, but we have to be the vigilant ones to catch them. We start off again with the source, right? Sourcing of the deals is super important because that is half the battle. When we receive a deal from a known broker source that we've vetted and we understand who they are and where they get their deals from and how well they know their industry, and if there's a problem, they could help us. All those are big checks in the plus column versus, just a random submission on the web that could be from anyone about anything. And then the website, right? You could go through and check and see who's on the website. LinkedIn, you could check and see, is that business, are these owners of this business? Is the equipment, again, back to smell test, is the equipment something that's going to work? This one's a little bit more it's not that intensive in tools. Yes, using Clear, doing the same tools that you use on the individuals can be used on the business, and those will give you the background to make sure that you know who it is. Ultimately, we use articles of incorporation along with SOS and everything to make sure that the ownership is right. Some might go into the K1 level. Vicki, I don't know what level you go to make sure that the authenticity is there.
Yeah, we require proof of ownership of the company. And that can come in many forms. There are some states, and anybody who's done an SOS lookup of businesses across the United States knows that every state's different. Texas is wonderful because it will list every owner of the company, everybody who's affiliated with it. There are other states where you can't even download the articles. So when we're not able to ascertain ownership percentage from the Secretary of State, then we're going back and needing additional information. So yeah, the organization papers, a lot of times will list whether it's for an LLC, single entity LLC, or multiple member LLC. And so we just have to dig until we find it. We're not going to fund the deal until we're confident that we have identified all of the owners of the organization. And kind of back to the point you were making earlier, the omission is probably what happens more than anything. Oh, they only have, 10%, 20% ownership, so we didn't include them. But, as a company, our policy is that we need 100% of ownership on the deal. So we have to identify that. We also use PayNet. So not every business is going to come up under PayNet, but that's one of the nice things that we're able to vet a business anyway, and see some of their history there.
I think, yeah, getting close and personal with who's the applicant is important too. So, interviewing the PG, I think that as a broker, it's the responsible thing we are counting on. We'll sometimes get on, we'll generally do the recorded verbal as well. We've had situations where we've had our suspicions that there is some fraud going on, and we've asked for a video interview, and sure enough, they went away because we could tell that the applicant didn't match, the likeness of this 78-year-old gentleman from Oklahoma again, versus who we were talking to on the phone. And we said, great, let's do a verbal interview, and we got to look at the driver's license and everything, and they would go away. So there are enough tools out there to at least formulate your own best guess and then substantiate those with some of these additional check boxes. The more you can empower your team, and I mean from the front end, right? So we have deals that come in and we use AI. We use quite a bit of AI that takes the application, does OCR reading of handwritten and otherwise, and incorporates it. But we'll then have the system check to see the Google Maps address, for example, and say, hey, does this look like a facility that actually is able to manufacture these goods? We've seen a lot of situations that they have kind of distributorship channels versus actual manufacturing. And that, I think, is, we saved really the most prevalent and best for last, which is I think we're done with this slide, Vicky. Anything else to add? Yeah, so okay. So vendor fraud, probably the most rampant, probably the one that we see the most often because it really is the easiest, especially if you're dealing with private party sales. And I think, Vicky, you don't even deal with private party sales because of this.
We used to, but ran into so much trouble with them that we stopped considering them. Yeah.
Yeah. So do you want to just elaborate a little on private party sale and what steps you would take and what happened?
Yeah, absolutely. So at one point in time, we decided that we were going to consider private party, but those of you that know Integra, like I said, we finance primarily in the transportation sector. And so these were over-the-road trucks, titled equipment. And a lot of what we saw was, a consignment type situation, which in and of itself is not necessarily immediately fraud related. But we have run into situations where there was a consignment type sale. The money went to the vendor, but it was never paid to the owner. And so we were not able to, we ended up actually having to make good on a truck and, had to go after that vendor legally to try to recoup the money that we had paid. And there's a whole ring of this type of fraud that's out there. I'm not going to say it's the norm, but it does happen. And so one of the other challenges that we had with private party type deals was just getting the title back to us. So, we have a whole process that we go through ahead of time. We have to see the title, get a copy of it, and make sure that they know how to execute it. But when it's a private party sale, once the money's changed hands, there's much less of an impetus for them to follow through and make it happen. And so after kind of a litany of our titling department coming back and saying, you know, this is not working, and it's causing problems with us being able to get a perfected title on equipment that we had paid for, we made the call to just kind of cut that off and not do that anymore. So from our standpoint, I think the biggest issue with private party was either consignment, somebody selling something on behalf of somebody else, or the title holder just not following through with what they needed to do, whether it was lackadaisical or whether it was intentional.
And that's really interesting, because titled equipment is generally the easiest to obtain proof of ownership and clear transfer of title and everything. So that's an interesting case. Most funders that won't allow private party are okay with the title piece because of that kind of comfort in that piece. It's when you're dealing with buying from a private party, something that you need to now obtain proof of ownership from the selling party to ensure that they actually own it. They own it outright. There are no liens on it, and that it's owned in the proper name. So, for example, if there's a company that is the seller called ABC Widgets, and ABC Widgets is selling you this drill, you look up, you get proof of ownership from ABC Widgets, but you don't know that this asset may be, you know, owned by a different entity that might have another lien on it. So it's a little bit of it's a little convoluted place to play in, but that's where you really need to dig in and understand and make sure that you're comfortable, A, working with private parties, B, that you have a good process in place to ensure that there is that proof of ownership, unencumbrance, and transfer, clean transfer, so you could perfect, because it is buyer beware, right? If you didn't go and do your due diligence, then we had a situation where we financed some brewery equipment, and a year later the deal went bad. We went to go, we picked our stuff up, and we got a call from someone who said, "Hey, I'm trying to get me the equipment I just paid $100,000 for." I said, "What are you talking about?" So I just bought it from this guy, and it was our debtor, the original debtor. And we said, how did you get proof that he doesn't owe? I mean, he owes us money on this. It's ours. And he said, well, he sent me a clear, you know, an affidavit that the equipment is free and clear. And we looked at it and we said, you didn't call an attorney to do a UCC check? And he said, what's that? I said, oh boy. So that was $100,000 lesson for him in that sense. Anyway, so now let's talk. So that was a little sidestep on just private party sales. I think what we're seeing more and more of is these very obscure vendor invoices that come through that have inconsistent invoicing on them. The logos might differ quite heavily from what you might have on the published website. Contact information might waver from there. Sometimes you'll see things that have heavy soft costs included to just get to a number. Round numbers scare us, you know, when it's one of those kind of generic invoices through Excel, and it just says, hey, $150,000. And so those things are a little bit strange. We had a situation where we were financing a generator from Generac. Generac is a multinational vendor, very well respected and known. And we were dealing with a sales rep, and the sales rep's email address was, so Generac is generac.com, right? And his was generacsales.com. Okay, and he had 800 phone number and the 800 phone number, of course, went directly to the main phone number of the company. Everything checked out there. Fast forward, we financed it. We financed the generator, and the debtor comes back and says, "Oh, I don't want to pick it up anyway. I just cancel it." Okay, so now we know that he's complicit, and we knew that the wire. And the next slide, we will talk about checking wire instructions. That does say here, vendor changes in wire instructions, etc. We have a protocol. Accounting calls a published phone number, makes sure they're checking with the accounting department, confirms wire instructions. However, if you ever call Generac and ask for their accounting department, they say we need a name of someone to call. And so somehow this phone number and this extension was still tied to whoever was involved in this ring. So anyway, we ended up putting that out. We ended up tracing where the wire went to. It was some group in New York. We knew that that wouldn't be the strongest way for us to get this. We had signed documents from an individual with decent credit and some substantial assets, et cetera. So we actually sued and won and just finished collecting on that fraud case because we had the right documentation in place. So the point of that is to look for those disparities, those discrepancies, and make sure that you have that process in place to check where the funds may or may not be going, despite having those small nuanced differences. Yeah, so when we're looking for vendor websites, there are some tools like Wayback Machine. We see often a website for a vendor that was formed, within the last year or 6 months. Always, the DNS lookup of whois.com, that also gives you a little detail of, is this owned by an offshore company? Again, they're getting smarter and smarter, but these are some of the ways to maybe just make sure that you have a little bit of a heads up on what's going on. Google Maps, we love. Google Maps is our friend. We could also go back in time. There's a way to check in Google Maps to see if a storefront, so if you see a storefront with a sign on it, and you could go back 6 months and see if that same storefront had a sign on it, or there's ways to do that as well. Is it the appropriate fitting location for what's being sold? And again, the wire instructions, we'll talk about some of those processes as well. And the ownership crossover is one of the biggest things. So because people say, what difference does it make if you're paying a vendor? Well, because generally speaking, the vendors are going to be somehow interlaced with your borrower or the applicant. And then there's kind of a backdoor exchange of funds. So it's a non-arm's length transaction. And that we dig, so because we also sometimes look at securing real estate, we have some tools which are not hard to find also, but we'll use like Chicago Title, and we can actually pull up ownership of the location for the seller, right? And so we'll go in and we'll pull up that address and we'll say, okay, this store, and we had a recent one also, like gas station equipment, used car wash equipment being purchased out of state for another company. And something smelled really, really fishy. And we looked up the ownership of the property address of the selling entity. And sure enough, it was the applicant's company, a name that was owning. And it's funny, they still tried to finagle their way out of that. But checking a vendor is probably one of the most important things to teach your staff to do from the front end. When something comes in, you want every line of defense. It's not just the credit folks that are going to look at things. It's your sales guys on the front end, making sure that they're doing their due diligence. It's making sure that your operational people that are inputting the deals are doing their due diligence, using tools, and more eyes and ears, and empower them, empower them to say, you know what, you are a part of this process, and it'll give them a sense of pride and involvement rather than just, I'm just going to enter and keep my blind eye and not ask questions. Let them ask questions. Even if the question is wrong, it's a teaching moment to say, you know what? I'm okay with that. Thank you for looking finding that out, but it's okay. I get that this email address doesn't match that, but we've done business with them. We know what that, but thank you. And that starts to build your defense. It's like your own AI.
Yeah, and I think to just layer onto that, you know, when it's particularly important is when it's a new vendor to us. If we have a vendor that we've done business with multiple times with no problem, there's going to be less of an issue. But, you know, when it's somebody new to us, we are going to go look at Google Maps and make sure that it is a location that's selling trucks or that type of equipment. The one thing also that I wanted to point out that probably is one of the things that is most prevalent that we see is kind of inflated pricing, pricing that doesn't match. We pull multiple comps, and we're looking for a range of what that equipment should be worth. But what, you know, we've seen before is maybe, you know, if we're requiring $10,000 down, the vendor inflating the price of the equipment, and then, you know, saying that they took a down payment that maybe they didn't take. And so we have multiple ways that, you know, we combat that. You know, we require verification of any monies that have changed hands. Again, we do comp valuations and make sure that, you know, what we're financing, and let's say it is out of whack. You know, they're charging $100,000 for a piece of equipment that we think should, you know, be a $60,000 piece of equipment. It doesn't necessarily mean that we won't offer an approval, but we're only going to offer an approval up to the amount that we've verified that that equipment's worth. And so, you know, things that can change that. Maybe we didn't get complete specs up front. There are things that the broker and or vendor can do to, you know, explain why the equipment is worth that much and it shouldn't be out of line. You know, things like an APU on a truck or bearings and aluminum wheels. Those are actually several $1,000 comp valuations that if we're not aware of them up front, the valuation may come off out of line. And so by doing those, though, it opens us up to that conversation. So we have a really clear picture of what the equipment is that we're looking to finance.
Vicky, when we used to do a lot of trucks, how often do you go to the vendor's website and look up the listing and see a different price than what you see on the invoice? It's marked up.
And usually we're doing that so that we can get the comps, but then we see the price difference. Absolutely.
Yeah. And that happens also when they're kind of backdooring a down payment that we might have required, right? So you say, hey, I want skin in the game. You got to put 20% down, and all of a sudden the price is 20% higher because they've now. So just look out for those things. And again, more eyes and ears. I love tech, but people really are smart and can read these things. All right. Wire fraud, right? Probably the most, the simple way to stop that is by just having checks and measures in place, right? Checks, balances, make sure you have systems, make sure everyone's checking boxes. So we always make sure, well, I guess we're going back to so on a private party, you guys don't deal with private parties. On private parties, we like to send checks. We like to inspect if we can. We want to make sure, of course, I talked about all these things, the proof of ownership, and that you're checking the right UCC and clarity on that line of encumbrances. Making sure that you have PMSI is also important. This is for private party or vendor. You know, there's a 20-day rule from the date of delivery to the date that you're able to file your UCC lien before you fall under any blanket filings that might precede your filing. So that's an important one. I think that there's a practice that's been kind of lost over time with delivery and acceptance forms that could also make sure you're getting that signature on the right date. So this is something else we use. We try to use technology. So on the verbal, we might get on a pre-fund a date. We'll put that date, and then an automatic email goes out at that date that will then have them check off a few answers and make sure that that locks in that, yep, I got the equipment on this date, everything's good to go. I think these are just little fail measures to make sure that you are following up and making sure delivery takes place. There have been umpteen situations and where we've seen where there's kind of the smartest schemes are the ones that catch multiple sources, right? And what they'll do is they'll give you legitimate deals. The legitimate deal, well, what appears to be a legit, starts paying, and they'll pay well, and you might go more and more and deeper into it, and then they'll bring others into it. But ultimately, these could end up being schemes. I hate webinars that scare the crap out of you, but this is just one of the things to look at. Is you just need to make sure that the delivery and everything is taking place, because there are instances and situations where delivery is not taking place, or there's no actual goods, or equipment is being double, triple financed. And that's something else to really look out for as well. Because most people that are going to buy from a vendor, most funders, are not going to go do, and correct me if I'm wrong, Vicky, you're not going to go do a search, a UCC search before you fund, because you've got PMSI, perfected money security interest. And it would be interesting, it's interesting if you do have any suspicions or anything to see if, oh wow, there's already 3 other filings that are recent for similar or the same equipment. Or by the way, if there are 3 other filings recently and you're not aware of that, maybe you should also look into that and find out why they're taking on so much recent debt. So just another quick way. By the way, if you want to search without doing a full-blown search, I know this is for many states, California for sure, you could just go to the California Secretary of State website, conduct a UCC search, and you can actually find what filings have been done on that entity. Great way to just see, are these guys just taking on onerous debt in a short period of time or not, or maybe if there's something going on. Okay. Sorry, just one more second on that, Monica or Vicky. You're.
Now, let me figure out how to do it.
Just hit the back. I was just going to touch on the distributors, right? There's these distributors, and sometimes they're legitimate and sometimes they're not. And those are the ones that are generally going to be at a UPS store address, and they don't have any kind of goods or products or anything. We had a situation where we had the distributor checked out, but again, this is the equipment didn't end up getting delivered, but it did on a different one. And when we came back and confronted him on it, he said, you know what, I had no idea. He said, they paid me a couple grand to just do the invoice and pass the money and the paperwork between, and there you go. So watch the distributors, because they probably need to be vetted a little bit deeper than the guys that are actually selling the product. Vicky, I don't know if you work with distributors or not, but
No, we don't.
probably not on trucks anyway. Well, I guess your consignment house was a good test.
Well, yeah, exactly.
All right. So Vicky, you want to touch on some of the best practices and takeaways that we could deliver?
So, and I think we've kind of, walked through a lot of these. Number one, if you see something, say something. This should be communicated throughout the organization. Sometimes it'll be at funding, and if at funding we found something that made us take a step back, that's fine. I mean, like I said, once the money's changed hands, we lose a lot of leverage, and so we would rather stop a deal at funding than to have a deal go bad. Have a first payment default because it was a bad deal. Inconsistencies, vetting documentation, vetting and making sure that the information that's been provided in the application is matching those documents. And I would even go back to the SOS. I know a lot of our brokers are already running an SOS. And this is where relationships, whether it's our relationship with the broker or the broker's relationship with the vendors or even repeat customers of theirs, those relationships are key, because then we have basically a way to go back and really develop kind of that structure that helps us make sure that a deal is good. Going back to the 80-year-old grandma wanting a truck, or a doctor's office wanting $200,000 worth of copiers, just make sure that you understand why they need the equipment, and does it pass the smell test. I think the source of the transaction is important. A lot of times, especially on our side of the business, our brokers will have these vendor relationships. But there's also a situation where, deals may be coming in, and I think of one situation that really probably goes back more to identity fraud than anything, but we actually had a situation a few years back where there were insurance certificates that were being falsified. Whether that was coming from the vendor, whether that was coming from this kind of group, whether this was coming from the individual or the broker, it's important to make sure that all of those documents are legitimate documents. And so, throughout the process, again, that in particular was found by an account manager who noticed that 2 of the insurance certificates that had come across her desk had the signature for Progressive, but they were not Progressive insurance. And so see something, say something, and we kind of dug in and found that there was a lot of this going on from this particular source. So understand where the deals are coming from, and make sure that those are sources that you're willing to stand behind. This is a good one, and I think, Shervin, you had talked about this before, the transaction history and making sure that you're not shotgunning it out, or getting a bunch of declines and then doing a Hail Mary. Do you want to talk a little bit about that one?
Yeah, I mean, if we know, I think sometimes when deals are submitted, folks want to paint a pretty picture and put rosy lenses on and everything, and which is fine, but I think the ugly helps us determine what we're gonna do with it, and really speeds up the process, because we don't all have the same parameters and we don't all have the same appetite. So if they very often they'll say, hey, I sent it here, they said they turned it down because of fill in the blank, right? PayNet, et cetera. Okay, so I now know that my team has a different lens on to look at it and say, okay, well, we know that that was a bump. Now we could maybe look at it with a from a different perspective, and perhaps start to even look at some kind of structure. But without that, it's gonna elongate the process, because we're gonna find that stuff out anyway, and it's just gonna take longer time.
Yeah, especially when you see the credit hits that have rolled through from 3 different sources.
Right, and that's just part of that best practices. I can't tell you how many apps we receive that just have an application and an invoice, and it's hard for us to tell what okay, fine, if a trucker, but even if it's a trucker, right? How many trucks do they have? How long have they been driving for? It's like the basic things. If you could put those in there in a summary, and it could even be a templated summary, and what where you got the deal from, hey, I'm working directly with the customer. This vendor brought this deal to me, and they're a crop farmer, and they're looking for a new, tractor so that they could expand their operation, et cetera. That's it. It doesn't take a whole lot, but it gives us a little bit more perspective and gives us a little bit more comfort to know that there is an actual chance the deal's going to be completed and there's control on it and that it's legit. So
Right. Exactly. You know, and even going back to the trucker example, what carrier they're driving for. You know, we have gotten into a situation where we had multiple deals coming through one broker company, and basically it was one carrier that was financing a lot of different trucks, and took us a while to figure that out because we didn't have on the application, oh, hey, we need to know who they're driving for. But one of the things that would trigger for us is the ability to look at what exposure we have. If that carrier goes down, how many trucks are, you know, have we financed that carrier then would be looking, those drivers would be looking for somebody else. And we know there's going to be stress on financing. So again, the more information you can provide, and I think, you know, if nothing else, I would leave you with, you know, the broker is our first line of defense, and the best relationships that we have are with those brokers that aren't afraid to ask the hard questions. And it's not about just getting a deal funded, it's about getting a good deal funded and being able to deepen that relationship that we have with them. You know, we're you know, something that may be seen as a negative. If we have a good relationship with a broker and we know we can trust that they're doing due diligence for us as well, you know, that's going to go a lot further in us being able to, you know, maybe overcome some of those things that if it were a cold deal with a new broker might be an automatic, you know.
I often tell the story of we had about 60 reps, younger reps out of college, right? And they would do the app only deals. And I ran a commercial desk, so I was used to asking for details and financials and everything. And I'll tell you, this is pre-08, right? So everyone was just dial in for dollars, put the scan it, send it, approve, decline, throw it away, move on. And I was the decline doctor, right? So I would say, hey, could you ask them this question or for this? I said, I can't ask that. And so I would say, you know what, let me just give me, I got it. I'll ask the questions. But I think it's come full circle, and especially when times start to get a little bit tighter as the banks start to, you know, recoil a little bit, which is what's happening. I think it's okay to ask more questions because ultimately that's how you could offer the best solutions. And it also gives comfort that to the vendor, to the end user, that you you want to know about their business. You do know about their business, and there's respect that's built up that way. So I would encourage you to give your sales reps, your staff, that empower them to be able to do so, and to really enhance those relationships and their ability to get deals done. Quick anecdotal story Mayana put up over here, which is exactly on point. She says she had a gym wanting to finance an excavator, right? So they asked what's going on, and they said, oh, they want to put an outdoor obstacle course, and sounds like they dug in, and the applicant was signing off for a brother who has a construction company. So
Yeah.
Perfect way to end that
Yeah.
story right there.
Exactly.
That rounds us off here. I hope this helped you folks. I hope it gave you guys some perspective. Please share your feedback if you still have questions. I'm sure you guys know how to reach us. I'm Shervin Rossi and Vicky Rocco, and Alex is missed.
Yeah, he is missed, but I'm sure he will answer questions as well.
Yes. Thank you all. Thank you so much. Thank you, Vicky. Thank you, Monica. Thank you, Vicky.
Thanks, Shervin.
All right, I'm not seeing any other questions, but like I said, if you come up with something later, you guys are more than available to answer. So I want to thank you both for sharing your expertise with our members today. That does conclude our webinar. Thank you for participating. And this webinar will be posted on the members only section of the AACFB website if anyone wants to go back and review it at any time in the future. Thanks again and have a great day.
Thank you. Bye-bye.